Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 21st of September. All right, some major discombobulation in the market with, it's a clear sign. US Treasury yields falling, and actually at the same time, equity markets falling, right? So automatically, if you saw that sort of profile, you would be, it's heads up, be alarmed, something weird is going on. Now, the dollar, well, it's a bit of a strange price action here. You'd think it's a risk on profile, but it's not. When the yields fall, so US interest rates, you'd think the dollar would fall. It hasn't necessarily done that straight through the day. Massive risk off day, so you'd think the dollar block would get hit, but they also came back a bit as well. Now, the key to actually understanding the market, we know Wednesday's North American release of the FOMC meeting is critical for the next leg of the dollar. But let's not forget about global economics at this point. And this whole situation here where the equity markets have been hit, something is driving this, and you need to know what it is, right? So if you do have a good news service or go to BBC or anything for that matter, you'll find out what it is. We're talking about Evergrande. It's a massive Chinese, real estate fund, I guess you could call it. They're into actually a bit of everything. They're making motor cars these days, soft drinks, and a whole range of things. But the key part is they have got a $300 billion debt that is due to start. Interest payments are due, I think, over the next day or two. They owe, it's like massive, right? So the contagion effect of this sort of event in China, right? We probably haven't seen anything like this in China previously, or if it was probably covered up. So the whole situation is this could impact a whole range of things, but the big impact is on global growth, right? If this impacts the Chinese economy, which if they went broke, if the Chinese government lets them go broke, well, then it's going to have a flow-on effect through all of real estate, development, building, probably retail. A lot of banks will be probably crunched as well. There's likely to be a credit crunch in China, and it will stop the whole euphoric, let's invest in China, such massive returns, that may slow down as well. So it's a massive global growth issue. And that's why the dollar has rallied. And that's why equity markets have really come under pressure. Right? This is going to be at an extra layer of volatility to this week. And you know what? We expect a decent amount of volatility with the FOMC Wednesday. Okay, so this is going to be something very interesting to keep an eye on. Like the bonds, totally disrupted at this point. If anything, the safe havens have really come into play. If I just show you the charts here, now the Swiss hasn't really, I wouldn't say it's gone through the roof. Like the Swiss has rallied against the dollar, and sure, dollar yen has gone down. And if you look at commodities, definitely gold is a little bit higher here, right? Well, a fair bit higher, by about $25. So we are starting to see some fractures in the market. Now, this can be very short-lived. We have to sort of see how this Evergrande story sort of evolves. But we are starting to see also along those commodities, oil is breaking down through support levels. We've got, so it's going to be quite exciting. I mean, as I sort of chop and change, but so we've got this massive move in the equity markets. We've got oil has been, is breaking down through support levels. So keep an eye on that. Safe havens are generally up. Like what's going on with the dollar pairs and the dollar block? Well, it's a little bit tricky at this point. We are seeing a bit of a rush to the dollar, right? So the dollar block generally lower overall. Sterling, Aussie, and Kiwi all drifting lower, like Euro did as well, but it's a little bit problematic. See around this previous support line, it's finding a little bit of traffic there, and it's doing it tough. Ideally, I'd love to see strong US numbers, weak Eurozone numbers or German numbers to really give the Euro a push. So the dollar at the moment is rallying because of the expectations for the Fed to tell us they're going to give us a timeline to tapering, and then obviously interest rate hikes after that. Now it's also rallying around this potential global growth issue. It's a bit of a safe haven there as well. So you're looking at that and going, well, if the dollar's a safe haven, well, what about the yen and the Swiss? Right, the yen and the Swiss have rallied against the dollar, so it's a bit of a mixed bag. The dollar block basically are down, right? The two natural safe havens, so the Swiss or the three, the Swiss, the yen and gold are up, right? And it still leaves the dollar index up here. Dollar CAD really rushing to the top side with the strong dollar, also with oil breaking back down under $70 or 70, around 71. So there's plenty going on right now. Your job as a trader on a day like today is to try and identify opportunities. Where is momentum coming from? Now, if you're in the Asian/European session, keep an eye on US equity futures. They are bouncing back here, okay, which is not uncommon. That's a pretty massive sell-off here in the equity markets, down 2%, right? You get 2 or 3 days like that, it's panic stations, right? So that's the first big day. I think they were down 1% the other day as well. So we're going to keep a close eye on this. The equity futures are coming back, so which would mean those recent moves we saw in the North American session may be corrected a little bit. But this is the hard part about this. This is more like a sort of a geopolitical fracture in the market where we have an external sort of funding situation with a private company is so massive that it's going to impact the performance of the overall country like China. And that can have ramifications through global equity markets, global growth, as I said, and then we've got to work out what's going on from there. And you know what? At the end of the day, this is something that the Fed needs to sort of keep a close eye on. So as we head closer towards the FOMC meeting this week, this may escalate and it may, just cloud the overall FOMC and make that dollar trade a little bit trickier. But we'll have to wait and see how that plays out. Now, as you come through like today's trading, I mean, you can go through the economic calendar here and just sort of highlight, see where things are going to come out. Now, the milk auctions are pretty huge for New Zealand. Now, there hasn't been any sort of disruptions to that of late, so I can't see that really impacting just at the moment. We've got the first of the housing numbers coming out in the US. Now, is that going to be big? Well, you never know, but I can't imagine it sort of moving the market at this point. We've got the, don't forget, we've got the BAJ, we've got the Fed, the Bank of England, I think Norway, and maybe even Sweden meeting this week as well. So we've got lots of central bank activity. What we're trying to isolate is what is the dollar doing, and particularly after the release of the FOMC statement and their target rate, etc. We want to see what the timeline is for the US to start tapering. That's the most important aspect. Up until then, right, coming through Tuesday through Asia, Europe, North America, right, you're sort of probably trying to edge a few dollars in your account. That's pretty much it. The next big move will come from the FOMC, or if this Evergrande story escalates and becomes its own massive pulse in the market, right? So plenty going on. You just got to try and work out where is the trading opportunity. For me, right, I like this. I still like the principal idea of selling or buying US dollars on rallies, on dips, I should say. And that means selling the Euro, Sterling, Aussie and Kiwi on rallies, right? Makes a lot of sense. Got to keep an eye on dollar yen and dollar Swiss. As I said, if the Evergrande thing gets bigger, these things may come into play a lot clearer. The dollar CAD at the moment is up in the middle of nowhere. Oil is falling, which is pushing dollar CAD up as well. Don't forget, we've got the Canadian elections. Looks like Trudeau is still in front, but probably won't have a majority. So that's the political spectrum, which is just sort of not necessarily weighing on it, but it adds to the cloudy story there. And the dollar index overall, you've got to think, if the dollar's rallying as a safe haven, and then also on the expectations of the Fed tapering, well, that's got to keep the dollar buoyant at this point. Now, as a good indication, especially for those traders in North America, if you do have a good sort of service like this, like Metastock, keep an eye on what's going on between the treasuries and the equity markets, right? They don't usually go down together. They don't go up together, right? So if they are, there's an issue which is discombobulating the market, and that will make trading direction on some of on the major pairs a little bit problematic, right? So keep an eye on those as you go through the day. Safe havens, definitely get those up on your radar. I would suggest you start charting and getting some trend lines up on all the safe havens, gold, yen, Swiss, the dollar index, maybe even Bitcoin. Bitcoin's getting a little bit drilled at the moment, but that's where we are. So interesting stuff, lots of build up, lots of excitement as we come into Wednesday. To me, it's not exactly clear yet what we're supposed to be doing, as in what pairs to hit. Is the dollar going up? Treasuries and equities, to me, is a big question mark here around dollar direction, but we'll see how this thing plays out over the coming 24 hours. All right, guys, have a good one. Cheerio.